We were rather insulated from the sell down that we saw across North Asia. Of course, so not so many semiconductor or AI plays in the market here. What's driving the markets in China now?
Yeah, thanks for having me. Indeed, what you mentioned is right. In August already, early August, Chinese market has been outperforming on the downside. The main point as well is on the recovery. We have been underperforming as well. So what we can say is there is a low positioning today from international investors, negative year-to-date northbound flows as well. When you compare to Korea, for example, flows have been averaging around $18 billion in year-to-date and negative on China. So there is as well a cheap valuation. So I think investors are looking at it from an angle that is more an earnings angle. What you mentioned about the mortgage refinancing is very interesting as well. It's going in the right direction. What we need to be sure is that we should not extrapolate the impact for now. It's definitely a good news for property developers, but it has not been confirmed fully. 80 basis point interest rate savings, this is what we have in mind. What does it mean? It means roughly 300 billion renminbi disposable income for households, 0.7% retail sales. So this is a great amount of money, but would it be consumed or would it be saved? We know that the Chinese retail investors have a lot of cash powder and they are sitting on it for now. So the main point is, what does it mean for banks? And would they carry a partial burden or the full burden? And this may endanger the sustainability of their dividend. So I think the PBOC will need to cut rates, policy rates. In September, in our view, it was 10 BP. It may be more now. I think more risk of bigger cuts than our estimate, but they as well need to cut short-term funding rates to make sure that it is a bit bank funding, but right direction for sure.